The 10-year TNX Treasury note obviously had a nice little move back up here. Everybody was calling for this to break down. It's going to go back to zero, blah, 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 blah. We obviously have entered into an uptrend for the first time in a long time. We are now back above the 200 exponential, and the slope is flipped back to the upside. We closed slightly below the 200 simple, but depending on what measuring, drawing, whatever tools we have in place here, I am sort of looking at this. Obviously, there's a ton going on here, but we have broken out of our little descending channel right here. And once we broke out, the measure move would take us potentially back up to at least resistance or one of these key Fibonacci levels. Also looking at some little pattern action taking place here. We basically have a top right here and then a bottom, depending if you're going by candle closes or whatever. But if we go by candle close here and then high here and then a low here and then another high here, we're basically putting in an ascending triangle. Ascending triangle typically breaks out bullish, so now we have a descending channel basically where you're in a bullish trend. You slowly trend down inside of a channel, and then when you break out, you continue the trend. Also, we have a bullish pattern here, and again, the breakout of the pattern from either the bottom to top, or you can just do the meat if you want to do from like the C to the top, but it would give us a target roughly up here to like 1.5, 1.6. So something like that seems probable to me. Obviously, everyone is very bearish on this and massively bullish on bonds. I am the opposite. I'm a contrarian. But obviously, I use technical analysis, not just hopes and dreams, to determine what I think is going to happen in the markets. TLT, 20-year Treasury. This thing is attempting to save the trend from where it went parabolic right here. It has basically been selling off. The Fed has been buying, billions and billions and hundreds of billions of dollars per month of Treasury bonds. Is it possible this continues to the upside? Yeah, it's possible. There's still demand, obviously, for Treasury bonds, as like people aren't sure what's happening in the world and what's next. But we're barely hanging on to the 200 exponential moving average. 200 simple is still in a downtrend. It looks to me like this is going to fail, and then we're going to sell back off, probably to one of our targets to the downside. So that is what I'm paying attention to. Let's look at the VIX here. VIX had a little pop up to the upside here, starting to put in like a little bit of a bottom right here. I don't expect that to last. I don't expect this move to go crazy or anything. If we do, I would expect sudden volatility followed by an immediate sell back off as people swoop in and buy the dip. This is obviously correlated opposite to like the actual stock market. So S&P 500 volatility been inside of a descending channel basically for over a year and a half now. What I need to see happen here for me to even consider that this is potentially going to change and we're going to head back up towards like the macro top channel here or the macro bottom right here is some kind of move outside of our descending channel. But as far as I'm concerned, bunch of resistance above our heads right here. I think it's more likely we head back to the downside. But if we do start seeing volatility pick up, it probably is not good for assets. And if we see the 10-year Treasury start going up, or spiking to the upside, if we see the DXY continuing to gain strength and we see the VIX gaining strength as well, that probably means the stock market is going to take a shit, and crypto as well, etc. So crude oil showing strength here again, got the perfect bounce off the 200 exponential back above the 821, and it looks like it is starting to pick up momentum to the upside. The histogram has crossed over the slope line, over the zero line, and we are now inside the bullish control zone. Looks like oil will be headed back up here roughly to $75. After that, $80, and then potentially as high as $100. Sorry, Kathy, with your little $3 to $12 barrels of oil. Dow Jones Industrial Average, maybe in like 20 years, I would believe that. Dow Jones Industrial Average looks okay. We've been talking about as long as we're above this blue slope line, there's no reason to get bearish. We called the perfect bounce off of the green resistance support right here and the blue slope line here, put in a lower high since then, and now we have broken down from that blue slope line here. Does this mean the trend is over? No, but what are we seeing taking place? We're breaking down from a key support that has been acting as support since January of 2021. So the entire year, we have had a reaction bounce off of this every time we've touched it and never closed below it. Now we close below it. So that's a change in trend. We have one time right here where we had a slight 821 cross to the downside. We have one time right here where we had a slight 821 cross to the downside. And both those times we bounced that trend line perfectly. And now here we're getting an 821 cross to the downside and we have broken down from that trend line. So this looks to me like a potential change in trend. What I want to see happen, what I need to see happen to remain bullish on the Dow Jones is a bounce off of this level right here and reclaim of that blue slope line. Do not want to see a breakdown below 34,800 if this is going to remain bullish. If it does break down from there, I'm looking at this massive red trend line that goes back for literally like freaking decades. And that would give us somewhere around roughly, depending on how long it takes us to get there, essentially the 200 exponential and simple are headed to the same spot again. So I would expect basically at least an initial bounce and buying area, roughly at 33,500. I would expect it to act as at least temporary support. If we go to the weekly on this though, and we start to really look at what's taking place here, we have basically broken out of a 100-year channel. Let's go to our monthly actually. We have been inside of this channel at that like purple support back here, or resistance rather, since June 29th of, what is that? 1903, or no, wait. No, 1929. I'm sorry. So 1929 to 2021, and we have broken out of that resistance, and now we're above it. So to me, if we want to see this breakout, we want to see this continuation, we want to see the Dow just continue pushing up right here. We want to see a breakout, a retest of this area, roughly in purple, and then continuation to the upside. We also have, obviously, let's switch back to the weekly now. We have obviously a megaphone pattern here in red as well, being basically from back in February of 2018, where we have multiple tops right here, broke out, retested at a support, retested at a support, and then kept going to the upside. So we do not want to see it break down below that red point. If it does, we would expect it to maintain above purple in 32,000. If it breaks down from 32,000, we have to really start looking at some of these serious levels down here. Don't want to see that happen. We do not want to see this take out the February 2020 high. We do not want to see a breakdown below 30,000. We do still have a gap back here that was never closed. Do I think we're going to get back down there? Probably not anytime soon. But again, we have all literally week after week after week of selling and weakness in the Dow Jones as it floats to the upside. So what does that mean? The price is going up. There's a couple people buying here and there, but there's no volume flowing in. There's no momentum flowing in. So we're just literally in a melt up. So if all of a sudden any sellers whatsoever start to show up, this thing is just going to get absolutely crushed, because there's barely any buyers and there's no sellers. So that's the only reason it's going up here. S&P looks slightly stronger, still hanging on to basically the 8, but we have clear resistance support. We got to wait and see what happens with this. I'm still bullish on it until I'm not. So you could argue that if we start looking at some of these other previous wicks right here, that we can start getting potentially like some kind of other targets to the downside. We could, say that it's starting to like flatten the curve a little bit here, or starting to like have its own little like support here for the breakdowns from the initial trend line. So we can keep that in mind. If we do break down, I would expect us to find support somewhere around this area at like 440. But again, not going to get bearish on this thing when it's literally just melting up and looks stronger. NASDAQ looks even stronger, able to close back on top of the 8. Still expect continuation to the upside, and the measure move to play out looks much stronger. The big cap names are literally, once again, what's holding this up, as the majority of the composition of the NASDAQ looks like total shit. And if we look at the breadth of the market, we look at the advancers compared to decliners, we'll see that literally like Netflix, Amazon, Google, and Apple, and a couple other stocks are the only thing even making gains on this. But again, we're back up here at all-time highs. Continuation. Russell did exactly what we said. Did not make it back up to the top of the range. Came back down to the heart line. We got to see if this holds. Russell's total shit, total garbage, bunch of shitty companies. No one cares about this. The meme stocks could potentially help it to move back to the upside, but I expect the Russell to eventually roll over and be the first to roll over, although it actually looks better than the Dow right now, but only based on the 821 moving average. This is the only one of the stocks that's even on the daily close to the 200 exponential or simple index-wise of the 4 main indexes, and the Russell has literally done nothing. It's been inside this channel since January of 2021. So the Russell is a total piece of shit, and the weakness in it is telling us that we're probably topping out on these markets sometime in the near future. XLB, material sector, looks weak. 821 are about to cross to the downside. The measure move played out. The trade setup played out. And now it looks like we're coming down here to 200 exponential and simple. Retest the bottom of the range. Somewhere around $80 looks probable. Communication back still up at all-time highs on top of the 8 moving average, stronger than most, but starting to show some weakness. I would expect an initial sell-off to be back down to like 84.25, at which point in time we really got to play it by ear. I don't see any reason to get bearish on this just yet. XLY, consumer discretionary at all-time highs, basically closing at all-time highs, stronger than just about anything. I'm sure, basically like your Amazons and stuff have to do with that right there. XLE, energy, barely hanging on to 200 exponential on simple. 200 simple is about to cross over the 200 exponential. Looks like this is going to break down. Looks absolutely pathetic. By far the worst sector in the market. Looks like total shit. The fact that oil is basically looking somewhat bullish and at least okay, and this looks like total trash, tells me that, all these solar plays, all these clean energy plays, all these like natural gas and all this stuff, it's all trash. Anybody that's bullish on energy right now is looking at the short term when they should be looking at the long term. I'm bullish on energy in like 10 years, 5 years, but not right now. Right now looks like the worst place to put your money ever. We also do have some potential bullish divergence. We have a low right here. We have a much higher low right here. We have a low right here. We have a much higher low right here. We have a low right here. We have a much lower low on price action. I would expect another push down here and triple bullish divergence to develop, at which point in time we see a reaction rally to the upside. But we have to wait for that to develop. Again, still looks like trash. XLF, financial, back at the highs, below the 821. Looks like it's getting ready to cross to the downside. Looks like it's coming down here to our 200 exponential and simple to retest the bottom of the range and our target of $35. We'll just wait and see how that plays out, but I'm sure it will probably do exactly what we expect. XLI, industrial sector, still just going sideways inside this channel as it has been for literally since April, doing absolutely nothing. At the top of the range. I would expect it to bounce somewhere off of the heartline of the macro channel though. Below the 821, crossing back to the downside, but it's literally done that like 4 times in a row. We just need that infrastructure package and then it'll go to the moon. XLK, technology at all-time highs. Probably one of the strongest, but very clear bearish divergence developing. XLP, consumer staples, nice bullish candle came in today when everything else was weak. Trying to push back up here to the upside. I would expect this to still just continue to the upside and hit our eventual target up here at the 1.618, roughly $73 to $75. Looks stronger than most. XLRE, real estate sector at all-time highs, still looks good. Real estate market starting to weaken, but I don't see any reason why this thing doesn't keep moving up. XTN, transportation, obviously leading indicator, showing weakness, breaking down below the 821, bounced initially off the 200 exponential on simple. 200 simple is crossed above the 200 exponential, leading indicator for the shit storm that is potentially going to hit the market sometime in the near future. Jets looks like trash, like we talked about, below 200 exponential and simple. Hail looks like trash, barely hanging on to 200 exponential and losing slope. UPS looks like trash, breaking down below the 821, headed back down here to our potential trade setup of the 200 exponential and simple. And FedEx looks even worse, even trashier, even fucking garbagier. Below the 200 exponential and simple, below the 8 and the 21, all have negative slopes. Looks like this thing just wants to bleed out, probably come down and retest 234 after that. Does it get down to $180? Yeah, it probably does. FedEx probably, probably going to take a massive hit here in the near future. And last but not least for today, going to take a look. Gold and silver look very weak, broke down below 200 exponential and simple. DXY looking very strong, found support at the 200 exponential. Everybody hates the dollar. Everybody thinks the dollar is going weaker, but the dollar has in fact entered into a macro positive uptrend on the daily, the weekly, the monthly, left the bearish control zone, about to get the hard buy signal, multiple green histograms in a row, pumping off the 200 exponential moving average. This thing is getting ready to destroy everyone who fights against it, everyone that thinks that the dollar is weak. All the idiots that are on the wrong side of this trade are going to get absolutely crushed, because when this does break through that 93 the 93 level right here, it's going to have a parabolic move to the upside, and all of a sudden all the world's dollar denominated debt is just going to get absolutely crushed as everyone FOMOs in trying to get dollars so they can pay down their debt, because this is going to wreck everything. We have a multiple bottoming pattern right here. We have an Eve Adam bottom. We have a left shoulder, head, right shoulder, inverted head and shoulders bottom. We have multiple measure moves to the upside. We have potential to literally just destroy everyone. We have also flipped over the 200 exponential and 200 simple to the upside on our daily time frame. On our weekly time frame, we are coming back up here to retest the 200 exponential and simple, potentially reclaim those levels and go parabolic, momentum in our favor. And then finally, most importantly, the monthly time frame, for the first time in history, in existence, on this chart, going back to the 1980s, the dollar has been in a macro downtrend, and now we are above the 200 exponential. We're above the 200 simple. They both have positive slope line to the upside. We're above the 8 moving average, and we're attempting to retest and break through the 21 moving average at 93.34. And when we do, this thing is going to go absolutely parabolic and fucking destroy all the doubters. And that's going to do it for today, guys.